Great home, no question about that. More importantly, a great parcel of land to come along and build, renovate, redecorate.
Soaring interest rates haven't deterred these buyers in Sydney's inner west, all wanting this 4-bedroom family home on 560 square metres of land. It's a renovator's delight with a $2.2 million price guide.
2.1, good start.
Property prices are well and truly rebounding after shaking off the short but sharp downturn.
$2,895 once, twice, third all done. Is there any better bid before we sell it? Sold. Congratulations, sir.
The property market across Australia is in recovery mode, with house prices predicted to climb an average of 2 to 4% by mid-next year. If you live in Sydney, the jump could be as high as 6 to 9%. This would mean the median price tag will hit a record high of just over $1.6 million.
You know, in Sydney, we're seeing clearance rates anywhere in the high 60s to mid 70 range. Now, that is a really good or strong marketplace.
Some economists were predicting prices would fall by as much as 20% last year. Instead, demand from buyers competing for the few homes on the market, as well as stronger than expected immigration, has driven prices up.
I think for those that are not on the property ladder, it's certainly a difficult situation where you've got interest rates at an 11-year high and you've got property prices now rising.
Vinay and his fiancée Anya have just bought their first home for $1.3 million.
I was concerned about the rising interest rates, but we figured we have to break into the property market now. If not, we might be priced out for a really long time.
They enlisted buyer's agent Rich Harvey to help them get more bang for their buck.
A lot of our first home buyers are typically compromising and getting their foot on the ladder and buying in those outer areas in order to get some capital growth.
Which is what Vinay and Anya have done. They've moved 35 k's out of the city to Bosley Park in Sydney's west.
It's 4 bedrooms in the main house and the granny flat is 70 square metres. It also has a nice back patio and a front yard as well.
Their mortgage is just over $1 million. They're shelling out $6,100 a month on the loan.
I did end up putting down 20% as a deposit for this home. It was incredibly hard to save and it took me about 10 years. Plus, I was privileged enough to have the bank of mom and dad help out.
The couple moved in a month ago and are already worried about rising costs.
Both Anya and I have not switched on the heating system, but it's one of the sacrifices we are making. We have even taken a switching off the hot water after we are done with our showers.
The proportion of income needed to cover mortgage repayments has skyrocketed. Figures provided exclusively to the project show average repayments on an entry-level home for a couple aged 25 to 34 is 42% of their income, up from 29% in 2018. First-timers looking for property in Sydney and Canberra have the biggest dent in their budgets. They're forking out 58% and 49% of their incomes, respectively.
What we are expecting sometime next year is interest rates will start to fall. It should improve mortgage affordability, but on the flip side, it has this positive influence on house prices. And so what that means is the amount of deposit needed to gain access to the market is likely to increase and blow out.
Experts predict strong population growth and a limited supply of new housing will continue to put upward pressure on property prices.
Overall, if we look at history, if more houses had been built in Australia, property prices would be much lower than they are today. We really need to focus on the supply.
Some economists warn we're yet to see the fallout from fast rising rates, with many homeowners facing a mortgage cliff in coming months as their low-interest fixed loans expire.
And what that could do is lead to higher levels of distressed selling. And when you start to see a broad-based lift in distressed selling, it can have a negative impact on price.
And there's a new wave of mortgage stress coming. Almost 500,000 borrowers are coming off their fixed-rate mortgage in the next 6 months, with homeowners in New South Wales hit the hardest. While this graph also paints a bleak picture, showing the percentage of mortgage holders who are extremely at risk of going into mortgage stress right now.
The great Australian dream is to own your own home, and there is no doubt that Aussies have an obsession over buying property.
Anyone sitting on the sidelines thinking, look, I'll just wait for the market to crash, thinking this fiscal cliff is coming, I think that's a myth. I don't believe we've got a property crash coming anytime soon.
I just hate stories like that.
Yeah, well, I'm sorry, Jen. I apologise.
Yes, it's a really strange one because we heard the expert there say that next year interest rates might fall, but what that might do is put some pressure on the market and the costs of homes might rise. But this year, interest rates rose, and yet the cost of homes also rose.
Yeah, just not as fast.
Just not as fast. Is there something that I'm missing here? Because that sounds to me like it shouldn't and doesn't make sense.
Yeah.
And yet here we are.
Yeah.
What am I missing?
No, I don't think you're missing anything. I think it's just that the demand is so hot and people are so desperate and people are borrowing more money than they can actually afford because they feel they don't have an option, that it just keeps... Like, there's no gravitational force on
Right.
Earth that seems strong enough to pull our house prices down, short of a serious crash.
Sometimes it just feels like I just want all of these experts to just shut the hell up, because it's partly what kind of got us into this mess in the first place, listening to, not to blame Philip Lowe, but him saying that interest rates aren't going to rise until 2024. So you think, you know what, people know what they're talking about. I'm going to take a leap of faith. And you do, and you end up in this really horrible situation.
Shut up about houses. We'll have 2 more reports later in the week on that.